Hey traders, Nick here looking at Facebook. Apparently there was some scary news report on TV, and it is falling 3.5% on a day where the Nasdaq is also falling 1.5%. So a fall of 3.5% on a big down day in the Nasdaq is not that concerning, first of all. Second of all, have we not learned our lesson that I don't know what they said, but I can tell you I spoke to at least half a dozen people just this morning in the span of an hour. They all said the same exact words with the concerns. Really bad this time. And I asked what was bad. I didn't get an answer. So so here's what I'm going to do. I'm not going to know what it is. I'm not going to Google it. I'm not going to watch the TV again. I don't know what the hell it was. I don't watch CNBC. I don't watch 60 Minutes. So let's just use a couple of things. One, the P&L. Two, the chart. The P&L, I don't need to revisit. It's on rails. If you think the P&L is scary in Facebook, you shouldn't invest in stocks at all. And I also want to remind you as to the prior problems. Beep. Get the fudge out. Careful if you're long Futu. We'll go visit it. The Cambridge Analytica, that was the end of Facebook. If you listen to CNBC at the time, it was, oh my God, the advertisers are going to leave in drove. Nobody's going to trust this company. Even though at the time, if you looked at it, they didn't do anything wrong, except they didn't actually hang the company out in public. When they caught the company cheating, Analytica, breaking its own rules, they kicked it out, but they didn't call it out. That was their problem. So anyway, the stock, doubled since then? Okay, so don't listen to the news. Use your logic. Use facts, not opinions of facts. Fact, the P&L is bulletproof, as it is right now. Second fact, which people don't realize, Facebook doesn't give a shit about what we think in the US, because we are a tiny sliver of the users worldwide. So public opinion here counts almost nothing there, literally, anywhere. So I don't know what the news is, but I can probably guess something to do with morality and, oh my God, somebody blew the whistle on something and that the U.S. cares about. Okay? Who cares? The eyeballs are not in the U.S. They're everywhere else. The advertisers might be here, but if they're chasing their ticket, it's the eyeballs everywhere. So we do matter from an economic standpoint, but the public opinion doesn't matter. So let's talk charts. If you tell me, if you cover up the name and you say, what would you do with this chart? I would say it broke down here and it's pricing the target from this breakdown. They fell, they tried to recover, they couldn't, and now they're just finishing the job. Right here, it's falling into May and July pivot points. What does that mean? In May, it failed here miserably on a huge pop. Came back down to a prior pivot point, just like this one, that played out as support. Prior resistance became forward support. Tested. Boom. Consolidated for a month. Boom. Tested. Big rally. Now it's getting tested. It's not a hard line in the sand, but if you want a couple of points, 327.9 is one. If you want another one, 322. So anywhere below 320, if it gets there, for me, it's a blind catch the falling knife. So what about now? Well, now it would constitute for a catch the falling knife the way I do it, because I sell puts and put spreads into people's panic. But the investor sentiment overall has been sidelined for the last 2 weeks. It's been souring. So I do trust my chart reading abilities on Facebook in the fact that this is a buyable dip zone, but it's not a hard line where I go all in. But I also have to layer on top of it the extrinsic risk from the overall souring markets. What if this is a start of another 8% drop from here in the market? It will take Facebook down with it to the next pivot zone. So take it one pivot zone at another. So let me put my lines back up. So these were my notes before today. Back here, it was it was resistance. Look, it was resistance. So it was the opportunity, and that was the upside. They overshot. So now zooming back in. So now you can see where there's a tabletop, that red line. If it gets to anywhere near that red line, it should be a bulletproof entry point for the mid-term and even the long term here. So this is a preliminary entry, 1 of 3, in my opinion. 1, 2, 3. So panic out here is probably wrong, in my opinion. If I own shares, I'm definitely not selling them. If I want shares, I'm definitely not going all in because it's still elevated. I mean, months ago it was here. Yes, a month ago it was here, and we're not even halfway between these two. So you can see that there's plenty of room to fall. This is the big buy the dip letters. If the markets crash, it could fall to 290 to 260. So just for giggles, would you buy Facebook at 260? Yeah. Well, guess what? There are opportunities that offer themselves from the options world where you get paid to promise to buy it there. I'm not going to say it so it doesn't come out as a trade alert of sorts. Nothing here is a trade alert. This is my 2 cents on on what's going on. If you trade from the news, literally you're the last person watching it because it has to go from the people in the know to the people who can publish the know, and then the people who can publish the know send it to the low-ranked people who are the interns that actually write the headlines and the articles about it, and then it goes out in the media. So where are you in this chain? If you're the one that finds out about the story before it breaks out and you want to trade it, fine. But if you're trading it now because of what you heard about it, I think you're late. That's my personal opinion. Anyway, I think you'll be happier if you don't listen to the news, especially for an investment purpose, because they say FOMO, right? FOMO creates problems. You're chasing late, getting out late. So FOMO works up and down because that's our nature. We want to follow what other people are doing to avoid the problems, because if you see people running in one direction, you run with them, not against them, to find out what they're running from. That's what the instinct that keeps us alive. But on Wall Street, it's the opposite that needs to happen most often. It's not a rule, but it's most often. So I'm just saying, don't capitulate out of a great story because of someone's opinion of it. Again, I don't know what they said, so I'm stepping out on a limb here that it's not detrimental to the actual earning ability. So that's the bottom line. How will this headline, so terrible headline, change its earning ability? So you make the decision. I don't know what it is. If you watch it and read about it and decide that, oh, this is going to cut its sales by this much because this or that, then by all means, trade it. So caution number 1, find out the facts and act on your own opinion, not somebody else's opinion. Caution number 2, the markets are tripping. So make sure you're playing in the confines of that. Nothing can rally on its own, and a bruised stock is not going to be, it will find it harder to find footing in a market that's also falling. Excuse me, hold on, I'm getting over a cold. Pardon me. So there are many variables, but none of which is that this is the end of Facebook. So I could be wrong. This headline could be the one, but so far not correct.